Hi there, Serial Trader here. I'm going to have a look at the major US indices, and given today's action, I think an update is certainly warranted here. Now, in the last video I did on the weekend, I was proposing that, hey, we're just not quite done to the upside yet, even though we're probably in the very later stages of it. And that proposal is that we had this, after having this minor wave forward down here at 36, 62.71, that we were working another impulse wave to the upside that would unfold in 5 waves. And we got the 1 and the 2. And then we were expecting, a wave 3 up here, and a wave 4, and a wave 5, to maybe finish 5, to maybe finish that larger 3. And again, there's different counts where this is finishing, a larger 5, and, the market might really be putting a major top, possible. Again, not quite ready to go there yet. But from a kind of a shorter term trading perspective, that overall wave count doesn't matter. What matters is the immediate pattern at hand. So now that the market, and also the title of the last video is Let the Market Call the Top. Well, I think the market may have done just that now. And let's kind of dive into that. So I would relabel this as kind of something along these lines. And that would be where we finished here in an ending diagonal, or a more classical charting pattern term would be a rising wedge. But the proper Elliott wave pattern would be an ending diagonal. And I don't like to lean into ending diagonals until it's kind of proven that one exists, because oftentimes you'll see an ending diagonal or what looks like an ending diagonal developing. You're getting excited about a big reversal, and then instead of doing what it just did here and dumping, you just pop out, and it's invalidated, and you have something more impulsive to the upside taking place. But looks like this could very well be a legitimate ending diagonal, and of course it has the requisite converging trend lines going into kind of like an apex here, right? So wave 1 is the longest, then you got a wave 2, then wave 3 is shorter than 1. You need 4-1 overlap in the case of an ending diagonal. You got the 4-1 overlap, and then wave 5 is shorter yet than wave 3, and then you get the big reversal down. So it meets all the criteria. So I'll run with that for now. So if this is correct, and we just complete an ending diagonal, we've finished something up here. I don't know exactly what degree to the upside we have finished. It could be pretty significant. And more importantly, it looks like we have an impulsive move down, at least on this short-term, relatively short-term basis. This is the hourly chart. So we have a little impulse wave to the downside here. And even just without going in on a real short-term time frame, let's just keep it at the hourly, which is still short-term, but not too short-term that it's just kind of noisy. You can definitely get 5 non-overlapping waves out of this move we had today. And probably drop that 1 degree there. So we get 5 non-overlapping waves down. It's looking, on a short-term basis, mature the downside. So we'll probably have a bounce fairly soon. Or, you typically would. If this is really bearish, I mean, we can keep dropping here. But what I would like to see in a more typical scenario is, okay, we got a little 5 waves down here on the smaller time frame, nearing completion or right there. I would want to see a corrective move up like this. Now, not necessarily exactly like this, but some sort of corrective move to the upside, right? Something like that. Let's put the lines back on. And of course, you'd be looking at some fib retracements. And you just throw on your fibs. So yeah, ideally somewhere into the typical fib retracement zones, 50% retracement or 618, or you could even go up real deep to the 786. There is a gap here to at least be tested or filled potentially. So I wouldn't rule any of that out. So I wouldn't aggressively short just yet with any kind of size, because the setup's just not quite there yet. So yes, we've had a big reversal, possibly just finished this ending diagonal and starting a new trend of some sort to the downside. But short term looks like we need a bounce soon. And I think as this bounce pattern develops, if that's what it is, and we don't make a new high, I think this could present an interesting, bearish opportunity. But for now, you wait, you let it bounce up. I mean, if we say we bounce up to 3,800 plus on SPX, and then you attempt a bearish position there, say in my case, I'd be looking to sell some S&P E-mini futures with size, so some ES futures. So if we're 3,800 plus, and my stop is up here, 3870 or so, that could be a pretty good risk-reward ratio, risking, I don't know, 50, 60, 70 points to potentially make hundreds of points to the downside. And if we have a nice clear 5 down and 3 up, that would be a trade worth attempting. Again, the setup just isn't quite there yet. But obviously, if and when this shorter term bounce up plays out, I'd be certainly interested in attempting that. Okay, so that's really what I got going on here on SPX. Definitely a change in the tone here to the bearish side. Is this going to be the big market drop that everyone seems to be talking about? It's possible. The market certainly has a lot to the downside before you really run into any kind of significant support levels or what you could even argue is a reasonable valuation. Not that really matters. Let's just stick with the patterns here as they unfold. And yeah, we got a little 5 waves down here, it looks like, on the hourly. Looking for a 3-wave move up. Some sort of corrective pattern. And then I think it will be ripe for a fresh bearish entry. So we'll keep an eye on this. We may have actually put in a significant top. Let's just leave it at that for now. Okay, now if I go over to the other things to look at, of course, on Thinkorswim here, looking at a daily candlestick chart. So we had a gap down today. Pretty sizable, bar to the downside. Closed just off the lows of the day, but fairly bearish close towards the lower end of the candle. We closed well below the 20-period simple moving average. We closed below the T line there. And the 50-day simple moving average certainly appears within reach. So, I mean, bare minimum, I would say, is look for a move down to the 50 before this is all said and done. Although it could be substantially more than that. So far, we've only kind of broken this initial, I would call it like the first support level on the daily chart, which would be 37.49.62. So that did break. So we've broken some support. That is notable. On the weekly, now, of course, the week's not over yet. So don't read too much into this. But so far, say we closed on Friday near these levels, there is currently a weekly bearish engulfing candlestick. Engulfing, look at that, 3 prior weeks, real bodies. So if this stands as of Friday's close, this will be a pretty powerful weekly reversal signal. Although, again, with the caveat, the week's not done yet. If we get a big bounce up here, we could easily negate this weekly reversal. But currently, just to point out, it's there. Okay, so that's SPX. Obviously, we were overbought on the oscillator. Now we're coming off that overbought condition. Nowhere near oversold. So worth pointing that out. On the Dow Jones Industrial Average, we already had a move down to the 50-period simple moving average. Kind of closed right on that today. And let's see here on the weekly. What do we got kind of forming here on the weekly? Nothing really to point out there that's different from SPX. Okay, and that's the Dow. I'm not going to spend too much time because I'm not usually ever involved too much in the Dow. NASDAQ composite, so gap down, close below the T line. We haven't even touched this 20-period simple moving average yet. Sorry, 20-period simple moving average yet. But you know the NASDAQ, it always, well, I won't say always, but it's been in the habit of going up more and then pulling back less. That could change, of course, but so far it's kind of holding true to that. at least in relation to its own price action. It certainly had a less severe decline so far than SPX or the Dow. Again, in relation to its own previous, support levels and moving averages and that sort of thing. Okay, what kind of weekly candle do we have pending here on the NASDAQ? Possibly a dark cloud cover candle on the weekly. If it closes lower, we might actually get a weekly bearish engulfing. Again, that's if it closes lower on Friday. But currently, potential weekly reversal candle in play. So we'll keep an eye on that as of Friday's close, see what it looks like. Okay, so that's the majors there. Now the VIX. So I mentioned in the last video we were kind of building up this this pressure in the VIX. Even though the market was making new highs, the VIX was just refusing to make new lows. In fact, it was making higher lows. Well, look, VIX just exploded and closed right up there, almost near the high of the day, if not on the high of the day there. Actually, yeah, right at the high of the day, 37.21 here, based on this this data anyways. So a huge move up in the VIX, taking out multiple prior resistance levels. That's a pretty powerful looking move up from the VIX. I highly doubt that that's the end of the pullback, just going off of this. Now, more importantly than just the VIX itself, we got the VIX tool here. And here, just a moment. Okay, so I've just added these little yellow highlights here. So I also discussed in the last video, we had this larger divergence building up where, again, VVIX and VIX were making higher lows. Simultaneously, SPX was making higher highs. So it's a divergence. Normally, they have an inverse relationship. You'd be seeing lower lows on VIX and VVIX, higher highs on SPX. But when you get to a turning point or a reversal point, you often see those divergences form. And they certainly did prior to this happening. And now, obviously, VVIX well above the red moving average, SPX well below the blue moving average. So a confirmed sell signal using this tool. And I think it's a legitimate one at that. So yeah, I really just want to point that out. Also, so you've had major earnings reports come out on like market moving stocks, like multi-trillion-dollar market cap worth of earnings reports. And so far, some pretty weak to even bearish reactions on what many would argue are good or even great earnings reports. So what does that mean? Does that mean the earnings are bad? No, it doesn't mean the earnings are bad. It means the reaction to that information is bad, which just tells you kind of where the market was at. It was already so high, in my opinion, that even great news just wasn't great enough to match the unbelievable presumed expectations that were built into these mega cap stocks. So if you see a bearish reaction to an excellent earnings report or vice versa, that's good information, right? So based on all that, and maybe I don't normally do this on these broader market videos, but I'll just throw a little taste in there just to have a peek. Okay, so here we have Apple. Now, Apple didn't really do too much today because everyone was waiting with bated breath for the earnings report. Although it had a bit of a mildly bearish day on the regular session. But let's have a look at that earnings report. So now that the earnings report came out, let's see, we closed at 142.06 in Apple. And again, this could change tomorrow during regular market hours. But fairly notable, in the after hours session, after the earnings have come out, we're trading right around 137, 138. So we're actually down on what many are declaring as an excellent earnings report. So that's good information. Now Microsoft came out as well. And that was yesterday after the bell. But let's just have a look at this. So even though Microsoft came out with, again, what many are considering an excellent earnings report, we closed up 0.25% for the day, obviously rejecting much higher levels that we made intraday on big volume. So again, good information. Kind of the market saying, yeah, it was a great report, but our expectations were even higher. So again, when these big stocks start rejecting what you would consider to be bullish news, that's something to take note of. What else? Amazon. Amazon earnings don't come out, I think, until February 2nd. So still waiting on Amazon earnings, but Amazon did a legitimate bearish engulfing daily candlestick, engulfing 1, 2, 3, 4 prior daily candles. So that's a pretty strong daily candlestick sell signal on Amazon. Again, that's a huge mega cap stock. Definitely a market moving size stock, as are the others. And what else? Let's have a look at Netflix. Netflix, big down day today, almost down 7%. And yeah, so we've already had earnings on Netflix. In fact, we already had a big move up on earnings several days ago on Netflix. And now we've almost we haven't taken back that entire pop, but we've taken back a lot of it. So obviously, with all these big mega cap stocks tanking and rejecting these higher levels, that's certainly a bearish sign for the overall indices, right? Okay, that's Netflix. And Google, I haven't even looked at this for a while, but let's have a look at Google. Yeah, Google had a bad day as well. Closed below the T line. Google earnings don't come out until February 2nd as well. So to me, there's definitely some pretty significant warning signs here. And again, what I pointed out on the chart here, we certainly have a short-term 5 waves to the downside. So that suggests the trend of at least one larger degree has now switched to down. So looking for a corrective retracement and then a potential opportunity for that next 5-wave move down. Okay. I think I'll leave it there. Said what I wanted to say there. And we'll see what the rest of the week brings. Got 2 more days. And definitely keeping an eye on the weekly closes there for those weekly reversal signals. But definitely change of tone today, it seems. All right, Serial Trader signing off.